What's up, everyone? Welcome back to On the Brink with Castle Island. I'm Nick Carter. Today, we have another installment in our long-running crypto dollarization mini-series. So far in this series, we've talked to some of the entrepreneurs building stablecoin systems. We've talked to academics evaluating the stability mechanics of assets like Tether. We've talked to traders and OTC desks that actually employ and use this asset on an everyday basis. But what we were missing was, of course, commentary from the issuers of the number one stablecoin. I'm referring, of course, to Tether. So Tether, on January 1st of this year, had about 4.8 billion in capitalization. In the last 6 months, it's exploded to 9.3 billion today. So a really dramatic increase, which left a lot of onlookers scratching their heads. So who better to weigh in on this than one of the administrators of the Tether system? Today, we're lucky to have Paolo Ardoino on the show. He is the CTO of Bitfinex and the CTO of Tether, so he's an extremely busy man. Paolo, in recent months, has become kind of the public face of Tether. He often chimes in on Twitter when Tether issuance occurs to contextualize it, and he has started doing more interviews. He was kind enough to agree to come on our show and discuss the growth of Tether with us. So today we talk about why, in his view, Tether exploded so much over the last 6 months, how much they really know about the usage traits of the Tether system, and why you would want to use crypto dollars instead of legacy financial rails. This is a super elucidating interview, especially if you're trying to learn more about the largest stablecoin and who its user base really is. So let's dive right in.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin. Bitcoin.
Paolo Ardoino is the CTO of Bitfinex and the CTO of Tether. He's a very busy man, so I appreciate you making time. Thanks so much for coming on the show.
Thank you very much, Nick, for having me. It's a pleasure.
The main thing I wanted to talk about was the growth of Tether and some of the technical nuances there. But maybe before we do that, I want to talk about something interesting that's happening recently. We've seen, since about March, a massive outflow of BTC from Bitfinex and a big inflow of Ether. Is there any color you can provide on the factors behind that? Do you have an explanation for that?
Yes, sure. So I cannot dive into many details, but on the BTC side, Bitfinex has been subject to or has been the home of few big OTC deals. At the same time, the BTC price, BTC USD price on Bitfinex that for months, if not for the last few years, was above the competition of a significant amount. Recently, after the 12th and 13th of March, is considerably below the competition. So it is easier for traders to send cash to Bitfinex and buy on the cheap and sell somewhere else. So there has been an interesting inversion of trend in terms of price recently after the 12th and 13th of March. OTC deals, as I said, few big OTC deals happened. I also commented that on Twitter. On the Ethereum side, is that we have seen, and I would say, a really considerable inflow, more than 1 million Ethereum in still again since the last 2 months. It's harder to comment on that. I'm not sure if that is preparation for Ethereum 2.0 or such. But we have seen, and we are monitoring these inflows and outflows. Also, Bitfinex is a margin trading platform, so it means that shorts on margin can be bought on spot and withdraw. So there are plenty of dynamics that we need that the listeners have to be aware of.
On the topic of Ethereum 2.0, historically, when there have been fork events, you've offered things like fork futures, which were really interesting because it allowed people to price potential catalysts. I believe you also had it for SegWit 2x, if I'm not mistaken. Are you thinking of anything like that for Ethereum 2.0, given that there's a big possibility space around what could happen there?
So this is really interesting question, and has different nuances. So of course, we are interested to explore. We are interested in exploring our options there. I was talking to our legal team, and the fact is that the difference is that the SegWit 2x was a contentious hardcore. So there was a lot of noise and a lot of different parties that had quite different interests. The Ethereum 2.0 should be a fairly simple upgrade, not simple as in technically simple, but the interests are much more aligned. What we were interested into is to trying to find a solution in order to use our technology called chain split tokens, that is what you were referred to SegWit 2x, and explore how to offer the ability of to our users to use that technology to signal the interest from their side to lock certain amount of Ethereum in order for us to start the staking process. So I think that the Ethereum 2.0 artwork is more directed to the staking part, and the SegWit, the chain split token would have that component. So we are trying to understand with our legal team if that is feasible. And of course, one key part of it, since there will be a staking reward and a future staking reward, you might see how this can be characterized as a security. And of course, we are quite protective in that sense. So we don't want to have to risk to list something that can be considered a security. So there are different things that different considerations that has to be taken in mind, but we are definitely looking to it.
On the topic, just briefly before we dive into the subject at hand, so on the topic of staking on behalf of users, there's a big drama recently with Steam, where Binance was asked to make political decisions because in practice you have staking as not only a potentially yield generating function, but it's also involves in some cases making governance decisions over networks. Do you guys have a policy there of like non-intervention or voting on behalf of users if you were to support staking for Ethereum and then that became a vector for governance decisions?
So we touched this topic with EOS. So Bitfinex is a EOS block producer, and we decided to build a software stack that use a technology similar to Monero in order to allow our users to anonymously vote, signing their votes, confirming the amounts of that they want to vote with, and signing the block producer's name they want to vote for. Although we gave this, I believe, really good and interesting and new technology to our users, only few really use it. So they seems like, although the users claim or say that they really want to be involved in the decisions, we had just few users really that they were willing to take their time and understand the different options and vote and decide really for whom they wanted to vote for. That was kind of sad because we built an entire software for it, and I think that it would be interesting and good if users would take active decisions. At the same time, can become a mess from the exchange point of view. Imagine if you have 10 different tokens, and if you have to give the opportunity to users to vote for every single decision that happened for all the 10 different blockchains, it basically is a huge work, and it requires an enormous amount of people. So it's hard to give the freedom to our users to still decide and vote independently from us, but also use us as a simplified way to get rewards. So we are still thinking about it, because of course we don't like to take let's say complex and possibly breaking decisions on behalf of our users.
Right.
So in case there will be that event, we will probably reuse the same tool and trying to get a sense of what our users want.
Okay, so because there's this principal agent problem for certain proof of stake chains where exchanges have ownership, they're effectively the agents of users. You prefer not to make decisions on behalf of users. You prefer to equip them to make those decisions, but in practice, users don't often get involved in governance. It's not worth it for them.
Yes, so we had to push really hard and start pinging users directly and say, look, there is this tool, please use it. I'm not telling you what to do, but be aware that we have this tool. And although we were pushing them, it was hard to get engagement. Maybe they were doing it once, but not many times. And so after the first time, they were really forgetting about it. And EOS in the first at the beginning had plenty of these cases where you had, if you recall, the migration between Ethereum and EOS required. There were many cases where users were scammed. So being a block producer was meant to be involved in having to block or freeze addresses in order to their users to get back their funds. So there were plenty of these decisions. There was that party that was trying to create a proper governance. I think that the project then failed in some way. But so that was a big opportunity and test run, I believe, and we didn't see much engagement. Maybe with Ethereum will be different. Hopefully the decisions will be a bit more lightweight. But in case there will be big decision and breaking decisions, we will reuse that tool, because it would be unfair for us to take breaking decisions on behalf of our users.
Yeah, I think the reluctance isn't that surprising to me. It's a little bit like retail investors that own public equity, and they can vote at the AGM on, the board of directors and so on. They have certain procedural matters they can vote on, but in practice they tend not to. And it's just the bigger funds that own a much larger portion of the stock that actually go to the effort to make those decisions and exert governance, because it's only because there's a cost to that information and to determining the right answers to those governance questions. So they'll only do it if there's a payoff, I guess.
Yeah, and you have to put a threshold, like at least 30% of the AUM that you have in the wallets should vote. Otherwise, I don't know, you take no action or you decide. It's tough, right? So it's all arbitrary numbers, and it's tough to really to find the right balance.
So moving on to the topic of the day. So from March to now, from early March to today, Tether has grown by about $4.5 to $5 billion. Correct me if I'm wrong there. Over $4 billion at least, yeah. So you recently passed $9 billion in total monetary base on Tether.
That's correct.
Which is pretty astonishing. And it's almost been a little overlooked. Like a few people have been posting the stats and showing the growth, but it's interesting because people were super focused on the growth of Tether in 2017 when it was still really, really small. And then now in 2020, it's been somewhat overlooked. But what's interesting is the transactional volumes of Tether on chain are outstripping all the other public blockchain, the kind of native unit transactional volumes, including Ethereum, and then potentially soon Bitcoin. So we're sort of seeing like the tetherization or the dollarization of public blockchains. What do you make of this? What do you make of the fact that crypto dollarization seems to be occurring, that moving dollars around seems to be a massive use case today?
Well, I think that, I was reading a report that 95% of wealth transfer on chain, probably more than 95%, is BTC, Tether, and Ethereum. And you're right. I mean, Tether growth massively in terms of market cap. It is astonishing also for us, for Tether itself. We know that of course, 2 months ago, we were still by far the biggest one. But we didn't expect so much growth in such a short time. So it is refreshing and really good to see the interest, the trust that the community puts in Tether. We have seen growth in both Ethereum and Tron in terms of blockchains. We have seen interest from many other companies in Tether outside of the simple crypto trading use case. We have seen mining pools interested in using Tether to buy equipment and pay the bills. Of course, the crypto trading remains the main use case. One thing that I want to underline here is that the Tether growth in the last months, so the 4 or 5 billion of growth, doesn't necessarily mean new money coming into crypto per se. Can also mean that money that was sitting on crypto and fiat on ramp crypto exchanges has been transferred and transformed in Tether. The reason I believe it's quite simple and obvious. So in the 12th and 13th of March, when there was that huge drop, 50% in Bitcoin and other major currencies, we have seen people being stuck on fiat on ramp exchanges because they couldn't move fast enough their dollars in order to exploit the market conditions or protect themselves or whatever you want there. So I believe that, and so this is what people said to us, that who had Tether dollars and who could use those on tethered exchanges was able to react much better, much faster to the market, to the sudden changes of market conditions. So possibly this awareness made the difference and made the growth. And I believe that Tether is absorbing part of the cash wealth that is sitting and in cash in bank accounts on many other exchanges. I believe that it's a great thing to see. It will allow so this growth of liquidity, the more liquidity there is in Tether, since basically is becoming the common denominator for many exchanges, will allow to have more markets, tight markets, more protection in terms of order books more liquid. That is really important. When Bitfinex traded $11 million in less than 1 minute during the crash in the 12th of March. I mean, that type of liquidity is really important if we want to become a more and more solid asset class.
So you're identifying a few phenomena here. So one is you're saying there's more and more kind of crypto native business being transacted with Tether as the unit of account, or actually as the medium of exchange rather. Dollar as the unit of account, I guess. And maybe this would previously have been settling in Bitcoin, but for convenience, things like mining equipment purchase is settling in Tether. And then the other really interesting phenomenon is the crash on March 12th was a reminder to a lot of industry participants that they need crypto native liquidity. They need on-chain liquidity that they can use to get access to these market venues. Dollars in bank accounts aren't good enough. They need to be ready. They need to be able to transact at short notice. And so you're saying they basically turn their balance sheet, it might have been dollars in a bank account, into dollars on chain so they could be ready to act at a moment's notice.
That is correct. I think that is the key factor, at least in my opinion, so this awareness made Tether even more popular. We have seen OTC desks that started dealing massively in Tether as well.
Is there a credibility acquisition that occurs with time? Is there a kind of a Lindy effect when it comes to Tether? I mean, you guys have been around Bitfinex has been around for a long time too, but Tether has been around since 2014. Is that right? 2014, 15?
Yeah, that's correct.
Is that a significant advantage, you would say, the fact that you've been around for over 5 years now?
Yes, we have been around 6 to 5 years. I think that this, I don't want to hide behind a finger. We have a massive first mover advantage, that including the fact that we decided to support many blockchains and many communities is giving us and keeping giving us a big edge against competition. So I think that we are gaining more and more trust. I think that people understand that Tether is solid, and the space anyway needs a solution like Tether, because you cannot. So it is naive to think that you can trade Bitcoin without an asset, a base asset that moves at the same pace of Bitcoin. So wires are not moving at the same pace, at the same speed. So that was the full reason why Tether was born in 2014. So there was a massive spread between exchanges, even 20 and 30% at some point. And in order to cover those spreads, if you send Bitcoin in 10 minutes, you need to send the equivalent dollars in 10 minutes or faster. So there is no other way around. Otherwise, you will always have spreads and discrepancies and latency.
And wires just, in practice, they settle much more slowly, I guess.
Yes, I mean, let's say that if you have two trading venues that use the same bank, and you have you can have intra-bank settlement procedure that is super fast, right? Maybe even 1 second. But this works only if, let's say, two exchanges use the same underlying bank. But that is in crypto is not the case. Exchanges are popping around. There are many in Asia, in US, in Europe, and so on. So you cannot use the same underlying bank. In traditional finance, if I send the time of settlement between moving around stocks between exchanges and wires is kind of the same. While so that works pretty well, because speed is the same. Is not so you have to have the same conditions in crypto, and Tether allows you to do that. There are other stable coins that have the same speed factor, but they just came later. They don't have the same hedge of innovation. Simple as that.
So now that Tether exists, it's ubiquitous in virtually every crypto exchange. I mean, most crypto exchanges really. It's highly liquid, as we know, and there's 9 billion or so in monetary base. Would you say crypto dollars are just functionally a more efficient way to send value worldwide than using the traditional banking system? Like, has that flippening occurred effectively?
I think so. Of course, the number of gateways that accept Tether is infinitely lower than who accept credit cards and wires and SafePay or ACH. So it is still a really long run before getting Tether to real mass adoption. But year after year we'll get there. We are seeing Tether used as a remittancy system and for used by travel agencies and paying the bills and paying salaries. So you always want things to go as fast as possible, and it's always annoying to wait. But adoption takes time, and I think that no one, even us, could think that in mid 2020 we would be already at $9 billion, given that at the beginning of the year we were around 4. So things can change quite quickly, especially if the conditions of the world will change, and the fact that there were stricter rules recently in terms of travel, in terms of cash management. There are plenty of places you couldn't even. I mean, the banknotes were not allowed as a mean of payment. So these type of conditions are really fertile for Tether to grow.
Totally. And, with the monetary, we've seen a lot of devaluations recently in various sovereign currencies, weaker currencies devaluing against the dollar. This has been accompanied by capital controls, new capital controls in places like Lebanon, which is having a banking crisis. So you can certainly see why people would turn to crypto dollars, which are just fundamentally less encumbered, and offer them but more transactional freedom.
Yeah, and you can keep control of your wealth. You have you have your private keys, and you can keep control of your wealth and move it as fast as you want. So that is a big hedge as well, right? So there is recently there was a big also with the COVID situation, there was concerns about the banks having fractional reserve and so on, right? So you want to move pretty fast. If you want to move really fast, Tether is an interesting solution then.
So one thing you alluded to is Tether's existence on multiple chains, which I find very interesting because, and actually most Tether has moved from Omni, which is on Bitcoin, to Ethereum recently, and then a lot has moved on to Tron as well. So this kind of validates a hypothesis that lots of people have had about chain agnosticism among popular applications, basically. I guess it helps because Tether isn't particularly idiosyncratic in terms of the way it uses the chain, given that it's just a token. But Tether is moving around on multiple blockchains frictionlessly, which is kind of an interesting new phenomenon. I don't think we've really seen something like that before.
We wanted to create something that could consider common denominator for the entire blockchain industry. So, in our industry, for example, I'm a big Bitcoiner, but I have to wear, if I work in a company like Tether, I have to wear multiple hats, right? It's important that a private company like Tether trying to maximize its growth and business case. So we started thinking to blockchain crypto space as a whole. And you can see that although blockchain is one technology, and well, there are different nuances, but then you have a lot of different communities like the Bitcoin community, the Ethereum community, the EOS community, and the Tron one. And you can see how sometimes they don't agree or they fight each other. So we thought, okay, but all these communities have a lot of power, a lot of interest, and they need a stable coin. So why don't make Tether the common stable coin among all these communities? So in 2017, really, we started we started adding Ethereum as because the traders, the crypto traders, were annoyed by the really high Bitcoin fees that were, at the peak where you could even spend $500 in a Bitcoin transaction. So only depending on Bitcoin was subject to that, right? So everyone was asking, well, why cannot you issue on Ethereum? So we did that at the end of 2017, but suddenly the market calmed. The crypto winter started, and almost no exchange really added Tether Ethereum. Only when the market started moving a bit, I think Huobi was the first exchange to add it. Then others started to add it, and the more volatility, the more interest is from people to have tethers moving faster on chain, because 10 minutes or 20 minutes, because you have some exchanges where waiting 3 confirmations, it's a hell of a time. So they wanted to have faster tethers. So we started adding Ethereum, then eventually Tron, and what we have seen with Tron has been really interesting. So Tron community and Justin Sun has started pushing really hard on marketing. And I believe that is a really interesting thing to see, right? Because you see this space also and blockchains also being treated as normal businesses. And he was really good in bringing a lot of attention, a lot of traders and exchanges deciding to use Tethertron. At the same time, Ethereum became a bit polluted because still the majority of transfers happen on Ethereum, that happen on daily basis on Ethereum are Tether. So that the fact that Tron became a bit more popular in the Tether ecosystem allowed Ethereum to be a bit less subject to the bloating from Tether. So you don't want really to have one. Also, for technical reasons, you don't want to have one single blockchain. Let's say that for any reason the Ethereum fees go through the roof. You really want to offer other options to your users. So adding more and more blockchains allow resilience. Of course, the way we choose blockchains is they have to have a big community. The security needs to be at top level. We have our list of requirements that includes, of course, multi-sig and hardware wallet support for multi-sig and burns. And at the same time, we get back a lot of interest and a lot of support from all these communities. We did that you can see on Liquid, they are really excited to have Tether because you can then do atomic swaps on Liquid. The Ethereum community is really supportive. We have seen now a few DeFi projects really pushing a lot on Tether. And then Tron, it's really easy to see the support that we are getting, and with the same videos and Algorand and the others, right? So I believe that it has been probably the wisest move that we could do to maintain the hedge and exploit all these different communities that populate our industry.
What do you make of the comments from some in the Ethereum community that Tether is like clogging the chain? I think Tether is consistently the biggest consumer of gas on Ethereum, and That's been part of the fee crisis there. Well, maybe crisis is a strong word, although there's of course certain Ponzi's, which I think are also using a lot of gas on Ethereum right now. Um, there's kind of two sides to this argument. You could say, well, on the one hand, it's forcing up prices to transact, which is potentially bad for the native unit for Ether, and it's also maybe displacing Ether to some degree in terms of being the transactional medium. But on the other hand, it's also a source of fee pressure for Ethereum, which many would say is good because having fee-driven security means that you don't have to have as much issuance-driven security. So have you been following this debate at all?
Yes. First of all, I believe that the fact that Tether exists on Ethereum makes miners quite happy. Now that Ethereum is still a proof of work blockchain. I also, the fact that still Tether exists on Ethereum, I believe this is important, right? My understanding of Ethereum is that Ether is you pay gas in Ether, and that is fine. But in theory, Ethereum should enable hundreds, thousands, millions of projects like Tether to run. So first of all, Tether just made a bit more evident the fact that Ethereum needs to scale a bit more. So this would be the reason of Ether 2.0. And imagine maybe if there wasn't Tether, maybe Ether 2.0 were probably the necessity of the space they're trying to achieve. Ether 2.0, Ethereum 2.0 would have been slower. So I think that realizing the fact that one single project that is successful, like Tether, can clog the blockchain is not a bad thing. Technology is the key, is the king in our industry, right? So the fact that one project can clog the blockchain is definitely not a good thing. So no one should be angry at Tether saying, "Hey, you are clogging the blockchain." First of all, we are giving many other options, and secondly, we are just. You should focus and you should think that you should work harder to make the upgrade coming sooner rather than later. So, I believe that the majority of people are happy that we are on Ethereum, and with Ethereum 2.0, it's likely that the problem will go away completely, or at least a good part. And again, Ethereum is supposed to power hundreds of thousands of projects like Tether to run on chain. So eventually that's the goal. So I don't see any problem in us being the first and biggest use case and showing and showing the path to others.
Yeah, and there's always the point that Tether is what forces people that transact in Tether to acquire ETH to pay transaction fees.
Sure.
So there's certainly some pressure from that. So on another topic, you also have Tether Gold, which is pretty interesting because it's like a gold ETF, but you actually have a claim on physical gold. So can you tell us a little bit about how that works and how you have it set up?
Yes. So I believe that this was one of the most exciting projects I've been participating this year. So Tether Gold is different from what the competition is offering, in the sense that we decided to find a company in Switzerland that could offer us a safe gold and the best security that you could find. At the same time, giving the ability to enter and audit the gold in the vault. So that is really important because it moves one step between, or one layer between the end user and the gold itself. So if you use a bank, it is definitely another layer, because I could not imagine that one of our competitors could go in the vault and actually see the gold and touch the gold. So also these allow us to deliver to the user that own at least 430 ounces of gold, their gold bar or their gold bars in any location in Switzerland. So the vault is in Switzerland, and Tether Gold users can redeem their Tether Golds for gold bars. So the limit is the minimum limit is 430 Tether Golds, because each gold bar varies from 390 to 415, 20 ounces. So in order to be on the safe side, we said if you have more than 430, we can definitely fulfill your requirement of having a full bar. And that will deliver to any address in Switzerland, and from there is up to you to take it anywhere. The reason why we don't ship internationally is that there are in different jurisdictions, there are different rules. So it is up to you to understand how you can get your gold at home. But we are happy to deliver it wherever you want in Switzerland in the safest way possible.
And when you own some Tether Gold, do you have a claim on a specific bar, or is it a pro rata share of the gold in the vaults?
So you have your Tether Golds that you have in the Ethereum wallet are linked to a specific gold bar. So there is a website that is called gold.tether.io. You can go there, input your Ethereum address, and you will see which gold bar or gold bars your Tether Golds are linked to. So you can actually claim and receive, if you want to redeem a specific gold bar, you can do that. So that is pretty cool, right? You know which gold bar you have. There is a serial code that is carved into the gold bar, and that is what you get. That is what you have in your Ethereum wallet. And if you transfer those Tether Gold on chain, the gold bar ID will follow the transfer. Of course, if you split those, you start splitting your gold bar, so you might eventually have multiple. Your Tether Gold will be referring to multiple gold bars, but there will be a consolidation process that will allow us to trying to reduce the pollution in the spreading of gold bars, in order for everyone to be able to have the least number of gold bar IDs possible in their wallets.
In a sense, this is like coming full circle, because I'm sure you remember some of the pre-Bitcoin digital cash projects were based on gold. Like eGold was a popular one in the late 90s to the early 2000s. And it was kind of the same idea. There were vaults with gold bars, and claims on those bars could circulate online, which was really innovative at that time. The only difference is there was no blockchain involved, so there was kind of more trust involved. It was kind of like PayPal with gold as the backing. We've come all the way back around to gold-backed digital cash tokens, effectively. So it's kind of funny to see that full circle.
Yeah, we had that. I agree. That really reminds me of that time, and it. I think that especially in this moment, gold seems like an interesting asset for people to hold. We decided to start this enterprise because we got a massive request from users. You can see that Tether Gold really surpassed in really a short time the competition in terms of market cap. Because I mean, we only do and invest this time to do this type of enterprise only if there is actual demand. And I believe that the one interesting fact is that we are seeing users holding Tether Gold rather than trading it, because in my understanding, when I talk to them, they tell me, look, Paolo, I keep gold, I keep Tether Gold because I can use it as collateral. I can use it. I mean, my portfolio will be a bit more solid. So the volatility in gold usually is slightly lower than volatility on stocks, right? So or probably Bitcoin as well. So it is considered at least a good differentiation into having portfolio. So and we have seen this clearly with the adoption that we got as soon as we issued it.
So for the Tether system as a whole, obviously one side of it is obtaining resilience on various crypto blockchains. You're up to 6 now, I think. In terms of being able to scale up, obviously you have the banking side of things. Are there how does the scaling work exactly if you were to go from, roughly 9 billion on Tether today to, let's say, 100 billion? Is that possible seamlessly, or what are the roadblocks there?
So this is a really interesting question, because when people think about stable coins, they have to think that it's not complex to go from 0 to, well, it's relatively not complex to go from 0 to 200, 300 million. But then if you surpass half a billion and more, then it becomes more, more complex to deal with banks, because the more you grow, the more you represent a big component in the bank balance sheet. So you have the way we are resilient is that we are using multiple banks. So between Bitfinex and Tether, we have from I think 6-7 banks that we are using now, and I think that it's important to keep growing the number of banks that you use, especially now that we are at the 9 billion. We have of course Deltec, and we have a few other banks that are really helping us, and they're really solid. I believe that if we have to go to $100 billion, then it would require probably a top tier, a tier 1 bank to help us in the enterprise. So yeah, the more you grow, the more you need diversification, and the more you need to step up the game, also dealing with the much bigger banks each time.
So on that topic, you told me before the call that you guys try and do a little bit of analysis to determine the usage of Tether. Can you tell us a little bit about your ability to evaluate how users are using Tether, and whether that's something you really try and stay abreast of?
So yes, so recently we started, well, not recently, but we recently announced, we started quite some time ago to use Chainalysis that allow Tether to follow and keep track of the major use cases of the stable coin. It's important that Tether is not is monitored, because you don't want few bad apples to ruin the game for everyone, right? So ensuring that when you talk to regulators, to law enforcement, you have always your answers ready. If something, if there are concerns, you have to be able to address them quickly. And the only way to do that is to be able to show that you are doing your best to track how your product is being used on chain.
So, what fraction of like the Tether economy are you able to characterize? Because I presume that chain analysis doesn't really cover everything.
It does not, right? For example, there is Tether Liquid. Liquid has confidential transactions, so chain analysis would not be able to track those. It's also true that I believe that 95% of the use of Tether now, probably more, is still crypto trading. So you can easily see big conglomerates of Tethers sitting on exchanges. So let's say that for the moment is still easy enough to ensure that everything is in control and it's easy enough to track Tether, how Tether is being used, because if you exclude the exchanges, the rest is not really big, and you can follow quite easily, I would say.
So one thing that people wonder about with stablecoins is business models in a negative interest rate world where large depositors effectively get charged fees for depositing money in the bank, which seems, illogical, but I guess that's the world we're living in these days. Do you have plans for that in a situation where the net interest income might actually be negative? And would you be able to survive a situation like that?
Tether already thought about this situation, and I think that it will be definitely possible. From what I understand from the CFO and the CIO, it will be definitely possible to at least break even in that situation, and probably do a bit better, still maintaining the capital in super safe investments. So I think that if you have, I think that it's harder if you have 500, $1 billion, but if you have $9 billion, it's definitely something that is achievable.
And I guess the other thing is you do have a redemption creation fee, so that's an alternative source of income too.
That is correct. So it's 0.1%. So I'm not sure if our competition has that, but still that, you can imagine with the recent growth of Tether, we were able to get quite some interesting fees out of that. And Tether is a super lean company, so the expenses are quite small. We don't have offices. We don't have crazy expenses, and the account is quite low. So going break even will be definitely easy, and definitely also making money also in that situation will be possible from what I get from the CFO and CIO.
So before we wrap up, I want to ask you, more personal questions. So you are effectively a public figurehead for Tether. You comment on the whale alerts tweets to add context when they cover the issuance transactions. And of course, you get a lot of criticism, being one of the few people that's consistently on the record about Tether. So, what is it like? How do you deal with all that critique? I mean, everybody gets some, but you certainly get a lot.
It's at the beginning was slightly annoying. Eventually, I think that I'm a guy with a nice sense of humor. I know that my life is being a coder and not being a public speaker. I try my best. I don't get angry if someone says that I'm stupid, I'm a bad person. I really don't care. I know that Tether, Bitfinex is made by people that have families, and there is plenty of opportunities acting in the right way. I think that I believe that being part of this family gives me the strength of supporting all the things that have been said against me. Recently, I think that I'm seeing people acting much more nicer towards me. I'm not sure if just because Bitcoin is going up or whatever, but I don't know. I just I sit behind the keyboard. I code. I respond to Twitter. I get a laugh if someone said something bad about me. I really don't care. You shouldn't. It's important in life to not take trolls too seriously. The troll is like is the perfect name, right? So if you start taking them too seriously, you really live a really bad life. So I became really good in that. The fact that I can do whatever I enjoy all the time, and I have this opportunity to code all the time, have a great team, and so on. It's so refreshing that everything else I don't care.
And I bet you never thought that you would be administering a monetary system to the tune of $9 billion.
No, definitely not. That is really interesting so far. And, I sleep a little just because I'm a control freak just because of that.
So, last note, are there any kind of misconceptions around Bitfinex or Tether that you wanted to correct, or any kind of lesser known facts that you wanted to shed light on before we go?
I don't think so. I mean, there are plenty of things that have been said, plenty of things that have been proven wrong by time. As Giancarlo, Tether's CFO, he always says, time is a gentleman. So, I mean, we have proven many times that we are good people, and we know how to build businesses. So we know that what we build is both with Tether and Bitfinex are keystones of our industry. We just wait, and see that the success speaks by itself.
Well, Paolo, you've been very forthcoming. This has been super, super interesting, and I really appreciate you coming on and sharing your thoughts with us.
Thank you very much, Nick, for having me. It's really a great pleasure for me.